Welcome to the Ontario Mortgage and Real Estate Insights podcast, where we cover the latest developments, trends, and regulatory changes affecting the industry. I am your host, Steve Hamoen. Whether you are a seasoned professional or just starting out, we have got the insights sourced from reputable news outlets to help you stay informed and make well-informed decisions. Today, we are diving into a critical issue that has been making waves in the mortgage and real estate industry: the growing risk of mortgage fraud and how to protect clients. In 2023 alone, the Canadian Anti-Fraud Centre processed more than 63,000 reports of fraud, resulting in staggering losses totaling $569 million. These figures likely underestimate the true extent of fraud, as the Anti-Fraud Centre estimates that only 5 to 10% of incidents are reported. While fraud can impact anyone, older Canadians are particularly vulnerable. According to Equifax, mortgage fraud stands out among the various forms of financial deception, occurring at a rate 30% higher than pre-pandemic levels. Staying vigilant and knowing what to watch out for are critical skills for mortgage brokers in shielding their clients from the harmful effects of fraud. So, what exactly is mortgage fraud? Mortgage fraud is a complex issue involving deliberately misrepresenting information to secure mortgage loans or more favorable mortgage terms. Perpetrators of mortgage fraud can vary, ranging from individuals exploiting loopholes to family members or industry insiders. Motivations for committing mortgage fraud can also vary, driven by factors such as heightened demand for home ownership, rising interest rates, or the potential for a large financial gain. The Canada Mortgage and Housing Corporation, or CMHC, details several types of mortgage fraud to be aware of. These include fraud for commission, fraud for profit, fraud for shelter, straw buyer schemes, and real estate title fraud. Fraud for commission occurs when a broker and other parties work together and use fraudulent means to obtain mortgages and increase the commissions they make from those mortgages. Fraud for profit occurs when a perpetrator works with a complicit purchaser to sell a property at an artificially inflated price, which is then used to deceive a mortgage lender or home buyer about the property's actual value. This type of fraud misuses the mortgage lending process to steal funds from lenders and homeowners. Fraud for shelter occurs when fabricated documents or false information, usually regarding the fraudster's income or credit history, are used to obtain larger mortgages. Straw buyer schemes involve intermediaries posing as legitimate buyers to apply for a mortgage on a home that they have no intention of paying off. Real estate title fraud involves stealing a homeowner's identity and legal property ownership using fake identification or forged documents. The fraudsters then refinance or sell the home without the homeowner's knowledge. Title insurance company FCT estimates that at least one attempted title fraud occurs every 4 business days. On a positive note, in early June, a new law came into effect in Ontario, providing a strong defense against predatory lending schemes targeting homeowners, especially older Canadians. The Homeowner Protection Act 2024 bans the registration of consumer notices of security interest or no-see on land title and deems no-sees for consumer goods currently registered on title to be expired. Those conducting nosy scams would prey on individuals seeking to improve their homes or upgrade essentials like furnaces or hot water tanks. Like a lien, a no-see would put a financial claim against a property title. When used fraudulently, unsuspecting homeowners would sign equipment rental contracts and not realize their properties have financial claims applied against them. When they attempted to sell or refinance their homes, they were confronted with demands for repayment of the equipment and high interest charges. Older Canadians, a particularly vulnerable group, were often the targets of no-see fraud. Their limited access to support networks and the fact that retired Canadians tend to be home more often during the day to answer the door or telephone made them easy prey for these deceptive tactics. With the ban on the registration of no-sees on land titles, the Ontario government is taking a significant step towards ending the exploitation that has already targeted and impacted many elderly Canadians. It is an important victory, but the battle against predatory lending continues. As trusted professionals, it is important for mortgage brokers to remain vigilant for signs of real estate fraud. Here are some red flags to watch out for. clients who are encouraged to provide false information on a mortgage loan application, reluctance to disclose crucial details, inflated mortgage amounts significantly higher than the value of the property, discouragement from property inspections, parties who use partial names, such as initials or different names, and persons who leave signature lines or other areas of an application blank. To help clients avoid becoming the target of fraud, mortgage brokers can encourage them to be candid and honest in loan applications, advise them never to add their name to someone else's mortgage unless there is a plan to make payments, recommend that they seek independent legal advice, advise them to conduct thorough property assessments, and remind them to verify the credentials of real estate professionals. By proactively educating your clients, you can empower them to recognize potential mortgage fraud and prevent them from falling victim to scams. Home Equity Bank, the provider of the CHIP reverse mortgage, is committed to being the most trusted bank solely focused on helping Canadian homeowners aged 55 and older and their families. To this end, Home Equity Bank's leaders instill a culture of integrity, encouraging all employees to have the courage to act and do what is right. Employees at Home Equity Bank receive training to help them identify potential suspicious activity. The bank's customer-centric approach and unwavering advocacy for the 55 and older demographic underpins its dedication to helping safeguard clients against fraud. At Home Equity Bank, we are dedicated to strengthening our partnership with mortgage brokers to protect and empower older Canadians. By working together, we can unlock the potential of your clients' homes, helping them enjoy a secure and fulfilling retirement. Learn how Home Equity Bank can help you create a brighter future for your clients. Contact your Home Equity Bank Business Development Manager or Business Development Associate today, or visit our website for more information. Despite a dip in inflation due to interest rate hikes, a recent report reveals that housing costs and prices for certain food products have surged since 2017, directly impacting Ontario residents. Over the past decade, housing costs in some parts of Ontario have skyrocketed by over 50%, and the prices of staple grocery items such as onions and potatoes have surged by 78% and 59%, respectively. The report, put together by real estate website and brokerage Zoocasa, says that while inflation, currently at 2.9%, is down, it still sits just above the Bank of Canada's target rate of 2%, meaning housing and groceries are costing Canadians more. According to data from Statistics Canada and the Canadian Real Estate Association, grocery prices rose 1.5% between April and May, while house prices in Kitchener-Waterloo and London and St. Thomas rose by more than 1%. The report says that while prices in both categories climbed between April 2017 and April 2024, house price growth outpaces increases in grocery costs. According to Zoocasa, the average retail prices for 16 common grocery products increased by an average of 34.5% between 2017 and 2024, while the average home price in 16 major cities in Canada increased by an average of 48.1%. According to the report, house prices have risen about 25% in Toronto in 7 years, sitting at an average of $1,156,167 as of April 2024. In Hamilton, Burlington, the data is combined. House prices have risen from $611,090 in 2017 to $918,196 in 2024, an increase of about 50%. In Kitchener-Waterloo, prices rose from an average of $512,030 in 2017 to $806,412 in April of this year, a 57% increase. As far as food goes, commonly purchased goods are more expensive than they were just 7 years ago, although price changes vary. According to the report, the cost of romaine lettuce is up from $3.20 to $3.70, an increase of close to 16%. Strawberry prices are also up about 16%, rising from $2.97 in 2017 to $3.46 in 2024. Price increases are more notable in other products, with salmon prices climbing from about $23.11 to $27.78, a 20% increase. Milk prices have also risen about 25%, from $2.33 to $2.92, while peanut butter prices are up 48%, from $4.04 to $5.97. Eggs, onions, and potatoes have experienced the most dramatic climbs, with price increases of over 50%. The escalation in housing prices relative to everyday consumer goods signals a challenging environment for affordability in Canada. As housing prices continue to outpace wage growth and grocery costs, aspiring homeowners and renters in particular feel the impact, Carrie Lysenko, Zoocasa Chief Executive Officer, said in the report. Choosing to invest in areas characterized by stable price appreciation and lower living costs can alleviate financial pressures and position investors for sustained financial growth. While the world has dealt with myriad crises during and after the pandemic, the report notes that Canadians are feeling the financial pinch a bit more acutely. According to Numbeo's Quality of Life Index, Canada ranks 27th on the Purchasing Power Index, trailing behind countries like France, the United Kingdom, South Korea, South Africa, and Australia. The country also boasts a higher cost of living than peer nations such as Germany, Sweden, and the United Arab Emirates. Canada also does not fare as well when compared to the United States. According to another Zoocasa report comparing median home prices in North American cities, houses are more affordable south of the border because Americans enjoy higher incomes. The report found that in 2021, the median household income in the United States was $75,149, much higher than the Canadian median income of $54,074. That said, the report notes that some areas boast an overall lower cost of living, with cities such as Montreal, Calgary, Regina, Saskatoon, and Edmonton offering lower prices and, therefore, more financial freedom. Fixed mortgage rates slid again this week. The lowest nationally advertised uninsured 2-year and 5-year fixed rates dipped 11 and 10 basis points respectively to 6.08 and 5.04%. For those not requiring short-term financing, 1- and 2-year mortgages are still too expensive. But their rates will improve as the Bank of Canada easing continues.
3-year fixed terms are still the number one travel visa, with nationally leading offers at 4.84% for insured and 5.24% for uninsured.
On the variable front, borrowers are crossing their fingers for another Bank of Canada rate cut next month. Prospects of that took a big hit after disappointing inflation numbers on Tuesday. Average core inflation went the wrong direction, rising 0.15 percentage points to 2.85%. Forward rate data from CanDeal DNA now imply another rate cut by September, though the July 24th Bank of Canada meeting is still in play. There is a pivotal jobs report next Friday and another crucial consumer price index release before the bank decides. Toronto's condominium market is experiencing a significant surge in listings, creating a bustling environment for buyers and sellers alike. According to recent data, the number of new condo listings in Toronto has increased substantially, making it one of the most active segments in the real estate market today. Several factors contribute to this influx of condo listings. One of the primary reasons is the recent drop in mortgage rates, which has encouraged many homeowners to list their properties. With lower borrowing costs, potential buyers are finding it more attractive to enter the market, fueling a cycle where increased demand leads to more listings. Moreover, the post-pandemic recovery has played a crucial role in this trend. As the economy rebounds, confidence among both buyers and sellers has risen, prompting more people to make real estate moves. Additionally, developers who had delayed projects during the pandemic are now completing and listing new units, adding to the inventory. Interestingly, this surge in listings comes at a time when the rental market is also heating up. Many investors are purchasing condos with the intent to rent them out, capitalizing on the high demand for rental properties in Toronto. This dual market activity is creating a dynamic landscape where both sales and rentals are thriving. However, this abundance of listings also brings challenges. For sellers, increased competition means they need to be strategic about pricing and marketing to attract buyers. For buyers, the plethora of options can be overwhelming, requiring careful consideration and often the guidance of experienced real estate professionals. Despite these challenges, the overall outlook for Toronto's condo market remains positive. The city's strong economic fundamentals, combined with attractive mortgage rates, suggest that this vibrant market activity will continue in the near term. For those looking to buy, sell, or invest in condos, staying informed and working with knowledgeable professionals will be key to navigating this bustling market. In an exciting development for the Ontario real estate market, RE/MAX Icon Realty has announced the opening of 2 new offices in the province. The new offices are located in London and Waterloo, and they bring nearly 130 agents to the RE/MAX brand. This expansion is spearheaded by Stephen Smith, Wes Watson, Dan Poirier, and Brad Howard, who previously established Davenport Realty in 2018. Over the years, Davenport Realty grew to include over 150 agents, and now the team is ready to take their business to the next level under the RE/MAX banner. Wes Watson, one of the key figures behind RE/MAX Icon Realty, expressed his enthusiasm about the move. "We are excited to grow our business under the RE/MAX banner," Watson said. "This will offer us many competitive advantages in our local real estate market, including enhanced brand recognition, access to a comprehensive tech toolbox, and an expansive referral network. The extensive support and resources RE/MAX offers will empower our agents to deliver even better service and value to our clients." The transition to RE/MAX is expected to provide the agents with unparalleled opportunities, especially in an ever-changing market. With the robust support system and resources that RE/MAX offers, the team at RE/MAX Icon Realty is well-positioned to navigate the complexities of the real estate landscape and deliver exceptional service to their clients. RE/MAX Icon Realty is also looking forward to adding more talent to its roster in the coming months. The team believes that the move to RE/MAX will not only enhance their current operations, but also attract new agents who are eager to benefit from the extensive resources and support that come with being part of the RE/MAX family. This expansion underscores the dynamic nature of the Ontario real estate market and highlights the continuous growth and opportunities within the industry. For agents and clients alike, the opening of these new offices represents a significant milestone and a promising future. That wraps up today's episode of the Ontario Mortgage and Real Estate Insights podcast. We have covered a range of important topics, from the growing risk of mortgage fraud to the latest trends in mortgage rates and the surge in condo listings in Toronto. Thank you for tuning in, and be sure to join us next time for more insights and updates on the Ontario real estate market. I am your host, Steve Hamoen. Have a great day.